Should we as traders be concerned with tariffs? It's the top question that I get right now on a weekly basis from traders that are just curious. How do we handle the uncertainty? Is there opportunity there? Well, I'm going to spend the next few minutes walking you through what we've been doing to navigate the uncertainty over the past number of weeks. My name is Mike Rixey. I'm the lead options instructor for NetPicks, and I want to spend the next few minutes walking through what we're anticipating in the weeks ahead, how we plan on navigating through the continued tariff uncertainty. We had further headlines break this morning. Potentially new tariffs on foreign films. It continues to be a daily occurrence, right? We're close to some deals with certain countries. Now we're talking about more tariffs. When does it end, right? So for me as an active trader, I want the uncertainty. I want the back and forth movement. What we're seeing on this daily chart of the S&P 500 ETF, big moves in both directions. That's ideally what I want to see on a regular basis. The moves that I dislike are the one-way moves higher or the one-way moves lower that never end. This type of movement over the past month and a half, it couldn't get any better for us as active traders. Now, there's some key points to make here. You have to control your risk. Everything's happening at a rapid pace. You don't want to swing for the fences right now, right? Keep proper risk management in mind. That's something that we talk about all the time, but especially now. But you also want to have a system in place that's really methodical, right? A system that you can trust in both bullish and bearish environments, a system that's going to give you exact entry, target, and stop levels. That way we can limit the emotional aspect that's tripping a lot of people up right now. Well, if we take a look at this market big picture, this move off of the low, the move to the downside, no doubt about it, was impressive, but this move off the low has been just as impressive, if not more so, because the news really hasn't improved all that much, and the bulls have made a big stand. We've seen a big move off of this low. We've broken up through a lot of resistance levels, and the last one up on the list here is the 200 period SMA. On this daily chart, it's sitting right around that 570 level. That could be tested within the next couple of days. We've got big news out this week. We've got a Fed meeting midweek. We've got more earnings releases this week. The catalysts are certainly there to keep us very active. If that level breaks, I know a lot of people don't want to hear this and don't believe it, but if that level breaks above 570, it could open the door to more all-time highs in the weeks ahead. Once we break that level, it could potentially be off to the races on the upside. You get some positive tariff headlines, and you never know. If this market has taught us anything over the past number of weeks, it's that anything is possible. Where traders are struggling is they fall into either that bullish camp or bearish camp, and they aren't adjusting quick enough. I want to be open to trades in both directions. We can have opinions on what we believe the market's going to do long term, but we can't let that impact how we're going to trade in the near term. When I look at this daily chart, I'm trying to predict what's going to happen over the next few days, the next week and a half or so. I'm not concerned with what's going to happen later this year. We'll cross that bridge when we get to it. Right? So that 570 level is an area to watch on the upside. If we roll back over to the downside, we have all these moving averages that we just broke up through on the upside. These all become areas of support. We've got support levels between 560 and a half all the way down to around 538-ish or so. That's an area of potential support that the bulls have working in their favor at this point. Now, if we break that low here around that 538 level, that could definitely make things interesting again on the downside. So again, does it matter that these tariff headlines are coming out daily? The Trump tweets are coming out daily. For me, I don't care, because my approach is that I believe all news is going to be priced into the charts immediately. Before we can ever interpret the news, before financial media can interpret the news and get all the experts on TV and radio and social media, we can see what the market thinks of the news immediately, right? So I'm not going to stress out about what's going to happen next, what headline is going to break next. I'm strictly concerned with executing my system, using proper risk, and if we can do that, there is certainly opportunity there. So let's take a look at how we apply that in more of an active time frame. I'm still going to stick with SPY here, but I'm going to shrink it down to the 130-minute time frame. This is our time frame that we use to identify our entry and exits. And we talked about this long setup in a recent video. And I talked about how we were looking for a push to the upside, and it wasn't based on a potential deal coming with China or another round of Trump tweets. It had nothing to do with it. I was strictly looking at price action on the chart saying, okay, we have this long setup. What made it a long setup? Well, our pulse indicators breaking from below zero to above zero. It's building energy on the upside. That energy is starting to be released on the upside. We get a close above our moving average, our EMA up here. That gave us the long setup. Now the calculator, the beauty of having a trade calculator is we have all of our criteria programmed into that calculator. When that criteria is met, we get an entry point, 2 targets above, a stop below. It's all outlined for us. It's either a setup or it's not, and I know exactly where to get in, where to get out before I ever put my hard-earned money on the line. So we came in. Let me scroll down my data window here so you can see it. So the entry point, this is what we call our trend trade. Entry point 532.97, target 1 545.74, target 2 556.69, and the stop initially 514.46. Everything's outlined for me. Was I concerned with putting on a bullish trade? Was I concerned that there was going to be another headline that breaks and it causes this move to completely fall apart? I wasn't concerned with that. I'm strictly looking at price action. I know that I can put on a fully risk-defined trade here. Did I come in and buy the shares of stock? I didn't. We came in, and let me grab my data journal, or my trade journal here. We came in and we bought the 535 calls, and that was in the May 9 cycle, the May 9 options. We spent $13.82. So it's just under $1,400 per contract. That was my max risk on the trade. I know I can't lose any more than that. If this move failed and we moved to the downside, I wasn't going to lose more than what I paid for the option. It's a fully risk-defined trade, and that helps me trade with more confidence, knowing that, worst case, if everything falls apart, I know how much I could potentially lose. I love having that aspect in place with the options. So on this long setup, we came up, we hit our first target. That allowed us to reduce the risk. We moved the stop to break even. It's always a great feeling when we can take the risk off the table. And we came up very, very close to our second target. Had that second target been hit, we would have taken the trade off at full target. Unfortunately, we got this move right here. We pulled back. We saw another headline break. We saw the market start to roll back over again. So I took the trade off, booked my profit on that pullback. We got out, booked a $527 profit per contract. It's a 38% return. Was this a record-breaking move back up to the highs? It wasn't. It was a great trade to the upside over a stretch of a couple of days. 1 to 5 days is typically what we're looking at as far as holding times go. So a really great 38% return, booking a profit from a trade that never hit. Well, it did eventually hit that second target, but I was already out. So we're booking a profit even when the market's not making those wild swings. We haven't seen those wild swings from a month ago. We haven't seen them lately. We've definitely seen us settle back down into that trending type, that slow grind to the market, to the upside type market, and we can work with that. There's definitely things that we can do. So great profit booked there. Now let's take a look at a trade that's setting up for us. Let's take a look at Apple. Apple's been one of the weaker names on the board today. It's actually down $6 on the session. But now look what happened. Our calculator's given us a short trade. It's given us a bearish trade. I don't care if the market moves up or down, doesn't matter to me. Now we see our pulse indicator start crossing below the zero line. From above zero to below zero, we get a close below our EMA. That tells us energy started to be released on the downside. I'm not expecting Apple to fall apart. I'm not expecting a big crash, but we don't need it to. I'm just looking at over the next few days, could we see a nice pullback? My entry point was touched here today. Entry point 199.07. Target 1, 191.84. Target 2, 185.65. And the stop initially, 211.12. Everything is outlined for me here. So what we did here earlier today, we went into the 197.5 puts, got into that position just over $5 per contract, so $500 total per contract is my risk number. If this reverses right back to the upside and we fly to the upside, if we hit the stop, I'm going to take the trade off, take my limited loss. It's a fully risk-defined trade. On the downside, if we can come down and hit first target at 191.84, I would move my stop to break even, take the risk off the trade there, and then my full target down at 185.65. So now everything's outlined for me. I would like to see Apple continue on the downside. If we can get a little bit of a pullback market wide, that would be helpful as well. But now I've done what I can do to control my risk, right? I've respected the system. I've put on the position size that I feel comfortable with. Now it's out of my control. Now I let the market do what it wants to do. I don't need to sit there glued to the screens all day long. The calculator has done the hard lifting for me, and now I just let the trade work out. And hopefully, fingers crossed, it does move to the downside. So we'll see what happens. I'll be back with you guys over the next few days. We'll take a look at this Apple position, see what ends up happening for us over the next few days. If you have any questions on anything that I've talked about today, if you would like more detail on what I've showed you here with our system, if you're just concerned or having a hard time getting through the volatility with all the tariff news, let us know. We'd love to help out. You can always comment on this video, or you can send us an email, info@netpicks.com. We'd be happy to connect to assist there. So I'm going to wrap this video up here. I'll be back with you guys over the next few days with our next video.
Everything discussed here is our opinion, and it is not to be taken as investment advice because we are not your financial advisor, nor have we considered your personal situation as your fiduciary. This presentation is for your education and entertainment only. Please review NetPicks' full risk disclaimer and privacy policy.